Good morning. You guys have so much energy today that I even have to be a little loud, which is remarkable because I never have to be loud. I'm just kind of hardwired with the loudness. Okay, so welcome. We're super excited that all of you guys are here with us this morning. And actually, before we get started, I think we have a special guest, right, Collins? Yes. Yes. Excellent. Well, welcome, John, and thank you for coming to visit with us today. So, again, welcome. And for those of you who are new or may not recall, the Lift the Rock program is something that we do every single week here at the Venture Center. The idea is to connect the local entrepreneurial community with the existing business community. So we always want to give a special thank you to our friends at the Little Rock Regional Chamber of Commerce for all that they do to support entrepreneurism within the bounds of Little Rock and beyond. And if you haven't met Miguel, be sure to meet him today and tell him thank you for all of his awesome work in the community. And also a special thank you to our friends at the Little Rock Technology Park for allowing us to be tenants in this fantastic space. And I encourage you to take a tour if you haven't had the opportunity to do so yet. While you're here with us today, we love if you share a little bit of social media love, right? And so if you want to do that, which I hope that you do, you're going to hop on to the Wi-Fi. This is the complicated password for the tech park. So if you are not yet a Venture Center member, by all means, use this password. But if you are a Venture Center member, keep in mind that you get some extra special benefits. Things like this fancy t-shirt, right? Fancy t-shirt and screaming fast Wi-Fi, courtesy of our very own entrepreneur in residence, Lou McAllister, and his broadband development group company. Their HyperLeap product is 1 gig up and down, and I think it's the best internet basically ever. I'm just going to put a period there. It's the best internet, period. Anyhow, so become a member and learn how that can benefit you. So as we get started, as always, we have one quick question. What is something that entrepreneurs need to truly be successful? Silence is not the answer. Yeah, I know you know the answer. For those of you who have been here before, we always hear coffee and capital, and we firmly believe that the other answer to that is connections. What was that? Pizza. Also helpful, the pizza. So connections. And to that end, today's presenter, Eric, the CEO of Alto IRA, needs to meet a kind of specific kind of person that he's going to tell you a little bit more about. He's specifically interested in people or investors who are interested in alternative assets, right? And he's going to tell you a little bit more about what that means and how you can figure out who you know that might be interested in being a customer or an investor, some kind of contributor, something awesome. So, going to give a little bit of love online. You're going to use the hashtag #LiftTheRock. You're going to tag the Venture Center on Twitter @VentureCenter or on Facebook @TheVentureCenter. And Alto doesn't quite have a social media presence yet, so just include their website, which is altoira.com, right? I hope that's right, because that's what's on the screen. That's what we're going with today. It's altoira.com. So with no further ado, give some energy to the room, and let's welcome our friend Eric, the founder and CEO of Alto IRA. Right?
I'm going to leave now. That was great. Thank you. Forward. All right, so I know I make Wayne nervous every time I get up in front of people to speak because he never knows what I'm going to say.
And neither do you. So.
You stole my line. But it is true. But if you ask me what entrepreneurs need to be successful, I think it's to know how to iron. So I was looking in my closet last night, and I noticed that all of my shirts needed to be ironed. So the first thing I did was I called my wife, and I said, how do I do this? And she said, well, you do the collar, then you do the sleeves, then you do the back, then you do the front. And I thought, well, maybe I'll look on YouTube, right? And then I thought, you know what? I'm an entrepreneur. I'm going to do this by trial and error, okay? And it turns out that it's okay. It can get a lot better with time. Sort of, you know, the more I do it, I could get better at it and I could do it faster. But at the end of the day, you can only iron a shirt so fast by yourself, right? I'm going to talk about self-directed IRAs, the process that I went through the first time to make an investment in a portfolio company that I had invested in, and it took me about 6 weeks to do. I've done a few more since, and I could get it down to 4 weeks, simply because I know the process on the other side of the table now better than I did the first time I started. But at the end of the day, the existing process won't go faster than 4 weeks. Most companies aren't going to wait 4 weeks for you to clear your investment with your custodian so that they can take your money. And that's the problem we set out to solve. So Alto enables individuals to invest in alternative assets, private equity, real estate, promissory notes, precious metals, commodities, using their tax-advantaged savings, IRA money, 401k money. Now, I'm used to giving this presentation in 60 seconds or less, so I'll try to fill some time here. I love this quote from Sam Altman. I don't know if anybody knows what Y Combinator is, but it's sort of the first accelerator out on the West Coast. And this really highlights the problem, right? Sam thinks the only thing he can do with his 401k money is to invest in publicly traded stocks, bonds, mutual funds, things that his current IRA account holder allows for, or 401k in this instance. So the first time I went to make a self-directed IRA investment, I did what a lot of people do, which is I went to Google and I asked Google if I was allowed to invest my IRA money into a private company. And Google told me I could, so it had to be true. So I called my broker and I said, hey, good news. I found a use for that money in my IRA. I'm going to invest in one of my portfolio companies. He said, great, just not here. You're not going to do it with us on our platform. I'm going to spare you the reasons why for a moment, but I said, okay, so how do I do it? And he said, I don't know. So I went back to Google, and it turns out that there's this self-directed IRA cottage industry of mom and pop custodians that has been growing considerably over the last 5 to 7 years. The current process for all of them, antiquated, unappealing, and expensive. And I'll get into those in a second. I touched on this a minute earlier in terms of the ability to invest in things that you actually know and want to invest in. All of these are do-it-yourself processes. Okay, it's like going to Home Depot because you want to build a woodshed, and that guy with the orange apron isn't there to tell you what you need to do it. So my solution is instead to buy the pre-made woodshed, right? And so a more relevant financial industry analogy is we do for self-directed IRA investors and investments what TurboTax has done for self-filers, right? Completely do-it-yourself process that if you're doing without an accountant, and certainly if you're doing it for the first 10 times, really complicated and hard to manage and takes way too long. With TurboTax, they ask you all the questions, you provide the answers, you go from one question to the next, and before you know it, you're done. So why am I doing this? Because I like numbers that start with T's, right? $25 trillion. This says $25 trillion by 2020. I actually saw a white paper the other day which says we have $25 trillion sitting in IRAs and 401ks today. That's a big number. It represents 90+% of all savings in this country. Less than 300 billion of it is invested via self-directed IRA accounts. So if you do the math, right, we're less than 2% of all of our savings invested in things that we know and want to invest in. If you look at people with after-tax savings and you say, what do they usually do from a portfolio perspective in terms of investment in alternative assets? Well, it's really 10 to 12%. So less than 2% here, 10 to 12% on an after-tax basis. So the question really is why? We've got alternative assets that return over time, greater level of returns than publicly traded securities, and we've got demand growing for this option. Got a huge transfer of wealth coming as the baby boomer generation passes away. $11 trillion, gonna create a whole, a much greater number of accredited households today than there have been in the past. In addition, we have a really favorable regulatory environment that hasn't existed previously. And by this I mean non-accredited investors are now allowed to invest in private companies, whereas before they couldn't. There's still caps and restrictions on how much they're allowed to spend or invest, but now they can do it, whereas before they couldn't. And you have Reg A+, which allows companies to raise up to $50 million from a combined accredited and non-accredited investor base. All right. Explaining the gap between the 2% and call it the 12%, right? The existing process, too paper-based and analog, too time-consuming, too expensive, and it's hard to figure out how it works, right? So the first time I did this, I had a full head of hair, right? Now look at me, right? And so I sort of walked you through this before, right? The steps I went through to figure out how to do a self-directed IRA on my own. Google, call my broker, you can do it, not here. Then I got to figure out how to do it on my own. So the first thing was education. The second thing is complexity. And the third thing is cost. That's the difference between the 2% today in self-directed IRA investing and the 12% in after-tax savings that gets invested in alternative assets. You can't read this as an eye test for a reason, because these are my parts of my email threads between myself and my custodian when I was trying to figure out how to make my first 2 investments. Again, it took me 6 weeks to do the first one, roughly 4 weeks to do the second, but here's the thing. The burden was all mine. I had to coordinate communication between myself and my custodian, myself, the company I was investing in, and the communications between the company I was investing in and the custodian. That's all on me. So, consumer value proposition for Alto. IRA investing made easy, an intuitive user interface, much like TurboTax, a simple cost structure based on activity, right? Not asset size. When you buy TurboTax, they charge you $99 to use the software for a year. They don't say, well, how big is your filing, right? What happens in the industry today is they say, how big is that investment you're making? Then we'll tell you what the fee is. We don't think that's right. We want to democratize the ability for people to invest their money in the things that they want to invest in. $99 a year. We want to make it affordable for anybody to do this. So I designed this way. Right? It wouldn't be a presentation if we didn't have one of these. But it's true. right? So low cost, fully automated, the other guys. This actually is the key to what we're doing. So I think it's really important that we make it easy for people to make investments. That's why we're doing this. But for the business to really work, this is the key. This is our virtuous cycle, right? Can anybody tell me why they call it a virtuous cycle, by the way? I don't think there's anything virtuous about it. But it keeps people using Alto as their platform and system. So investors like me come to Alto because I want to make an investment in a private company. We call that here the recipient of funds, because it could be a private company, it could be a seller of real estate, it could be someone borrowing money, right? And what happens in the process is Alto asks you for the documentation for the deal that you're investing in. Maybe I have it, maybe I don't. If I don't have it, I check a box which says I don't have it, and the platform says, no problem, we're going to get it from that company that you're investing in. And we know the company because you've given us that information and you've given us a contact at that company, right? So the recipient of funds, the company that we're talking about, gets an automated email from us which says, hey, Eric wants to invest in your company. He doesn't have these 5 things. If you want his money, you got to give us these 5 things. Turns out they want the money. They upload the documents. Guess what? In today's world, there are a lot more people that look like me than there used to be. So they say, hey, I've got these 4 other investors that want to use their IRA money to invest in the company. Can they invest on the platform? We say, sure. Enter their contact information here at Alto. We automatically send an email to those investors which says, hey, we understand you want to invest in company X. Here's an invitation to the deal library, right? So now the company only has to upload the documentation once. In today's world, they've got to do it 5 times with 5 different custodians that have 5 different processes and 5 different sets of requirements. Here it happens once. So guess what? Next time that company wants to raise money and they're going to have IRA investors, guess where they're going to go? They're going to go to Alto. Next time one of those investors wants to invest in another company, they're going to say, hey, I'm going to do it on Alto. The account's already set up. It's easy. It's automated. How do we make money? Transaction fees, annual account maintenance fees, and annual valuation fees. Turns out that you have to report the valuation of your assets to the IRS every year. You can do that on your own. If you'd like some help with it, we're happy to help you for a small fee. Investors like to see these slides, and I'm going to skip over it pretty quickly, right? So on average, investors who make alternative asset investments will actually make, you can't make a half investment, but they'll make 3.5 investments, right? So average account balance, $45,000 a year. Actual average account balance today in a self-directed IRA is $125,000. That's because 60% of these transactions are real estate, but we're enabling something that hasn't been enabled before, which is easy access to private equity transactions, right? So we think that's going to bring the number down. I'm going to say that's a relatively conservative number. Everybody at the FinTech Accelerator cringes when I say that, but I'm going to tell you why it is in a second. So people like to talk about CAC, 4 to 1. Again, I think this number's high. I think this number's low. I think we're probably like 7 to 1. All right. What can I promise you about this slide? Is wrong. Right? I don't know. But I can tell you that $11 million of revenue represents 0.2% of this market opportunity. Back of the envelope, not including other revenue channels, it's a $5 billion a year annual revenue market opportunity that I'm addressing, not total addressable market coming down, coming down, coming down. This is a $5 billion revenue market opportunity. I'm saying 11 million in year 3, 0.2%. I think it's conservative. So what have I done? I run a venture capital firm in Nashville. We've got 7 portfolio companies. I'm executive chairman of a company called Split Second. I highly encourage you all to go out and buy a split second device at splitsecond.com. It's auto crash detection notification. I founded a company called Currenex, which was the first online foreign currency exchange business, which State Street bought for just under $600 million in 2007. And I'm on the board of the Tennessee Valley Authority, the largest utility in the country, doing roughly $10 billion of revenue a year. My co-founder is the greatest financial jockey I've ever come across. He does the numbers. We're based in Nashville. That's what I know.
Okay, I'm sure you guys have some questions. I can see it on your faces. Okay, this first question is coming from the back of the room. I'm going to ask you to pass the microphone around. So if you would send that back there, thank you.
So on the virtuous cycle, one of the things that occurred to me, having done this a few times, is the investable company may not want their individual prospects to see the deal library. Have you set it up so that when you email their 5 people that want to invest in them, they can go to Alto but just see that deal?
They can only see that deal. So, sorry, we're not a funding portal. We're not presenting deal options, right? They're coming specifically just for that deal. Yes, sir.
But can, okay, in a case like that, where you've got the company that's, receiving the funds, okay? Yeah, they don't want to see competition, but outside of that kind of transaction, you've got all your other account holders. Can they say, hey, I want to go shopping, I want to look for deals? That's part of what's available, and is that legal under, what are the regulatory issues with that?
Right, so it is legal, and in fact, in fact, we made a very conscientious decision not to be a portal for this exact reason. We think, I guess it was about a year ago now, there were roughly 600 applications for funding portals. There aren't going to be 600 winners in the funding portal space, right? Maybe there will be 10. We think there's a kayak opportunity, meaning you go to kayak to shop for the best price across all the travel sites. You have an opportunity to come to Alto to shop for the best deals across all the funding portals.
Okay, so they can shop through you with that. You're not going to be a portal, you'll be like a kayak.
And that's not even in here. I mean, it's not in our numbers, but yes, that's a huge opportunity. So part of the problem if you look at what's happening in the funding portal sector today, there's virtually no consumer volume. Why? Because all their money's sitting in IRA and 401k accounts, and the funding portal platforms can't process them quickly enough. Not in a way that makes sense. It's a distraction, so they've all gone institutional. And they call us and they say, hey, can we scale with you? And the answer is yes. We're putting a final piece in place for them to do so, but that's where the liquidity and volume in the funding portal industry will come from, us.
Yeah, so that's right. So instead of you being a portal, you rather be a partner of all the portals.
Search engine. Yeah.
Is that going to be part of your system over the short or medium term, or is that late,
No,
years away?
it's short to medium term. So, for example, actually, I'm not. I can't say who it is, but a successful consumer products-based portal has already come and said, "Hey, if you deliver volume, we'll share fees." Great. Yes, sir.
Got a two-part question. Who's your target consumers? Or are you going after? Who's your target consumer? Are you going after someone who, because like when you're talking about investments and investing in what you know, I may enjoy business, enjoy real estate, but I don't understand the specialty nature of information you need to know to make an investment into a business. And so dropping that price point, well, I guess I should, who's your target audience?
My audience is anyone who wants to make an investment in a private company, in real estate, anyone who wants to participate on Lending Club, right, and try to get some yield there. I'm not going to tell you what's a good or bad investment. I'm just going to tell you that you can do it via our platform.
So is there any education, because I was just reading like on the website talking about y'all don't have fiduciary responsibility, anything like that. So if I'm coming and I'm just giving money in the hopes that my investment pans out, is there any other resource for someone coming in with their IRA? Because I feel like a lot of times the reason the money is kept up is because we're taught as a consumer base, as Americans, you put money away, you invest it for 50 years, and you get back 2% return, and that's great. The reason people don't invest in risky businesses is because it's risky, and most consumers don't take the time to do their due diligence. So where is that, I guess, gap between speaking to the target consumer, getting them to use the platform without becoming fiduciary responsible?
Yeah, so over a longer term, I think it's absolutely our responsibility to provide educational resources which says, hey, if you have $10,000 in your life savings, don't invest it all in a private company, right? Bad idea, okay? And but what we can't do is assume fiduciary responsibility for what you want to invest in. You know what? You can go to Vegas today and put $10,000 on black, and that's your right. But the government says you can't put $10,000 in a private company run by your best friends who you know and trust to the end of the world. That's just the regulation.
Let's see, sorry about that. Okay, so what is it, you're the administrator? What is?
We're a TPA, third-party administrator.
Third-party administrator, okay. What is the onus or responsibility that, the regulatory authorities put on you? You're not supposed to vet it, apparently, vet the investment. What, just cross the T's and dot the I's and get the paperwork, make sure the paperwork is in, or no, just make sure the paperwork is,
Yes,
that's
so great.
it? Collect the paperwork?
So great question. So what happens in the existing system today is it's people and paper burdened, okay? So it's a do-it-yourself questionnaire, self-reporting, right? And so that document gets sent to someone in a back office somewhere who reads your answers and determines whether or not your investment is a good investment. Is it a disqualified transaction or not? Is a disqualified person involved or not? Is it a prohibited transaction or not, right? What we do is we build all of that compliance into the process itself. So when you get to the end of the process, based on our questions and your answers, we know whether or not you're allowed to make this investment and keep the tax advantage status of your money.
Are you responsible if they answered it inaccurately? Like if there's a person involved that would disqualify and they say, no, there's not, is that because, okay, they said that and we don't have to check them?
Think of it this way. Company sends you your form and says, are you an accredited investor? And you say yes? Mm-hmm.
So where are you now? You've got, this is up and running, you have...
So We launched it. We ran a 7-day beta. We spent less than $5,000, got more than 400,000 hits, 20-something signups, and we had the first customer of that 20-something say, I want to transfer money. And so we had a short-term custodial partner in place in the background. That person transferred more than $300,000. They made their first investment in a fund. They went through the whole cycle. We've done it all, but we turned it off because our long-term custodial partner is not yet in place. So we're building a fully automated, seamless solution on the back end. The customer that we worked with, we told them up front, look, we're going to be pulling puppet strings behind the curtains, but it's going to be okay, and it was. So as soon as I have that permanent custodial partner in place, we'll turn it back on.
Time frame?
Less than 90 days.
Okay, I still see questions. John has a question. Can you pass the mic over to the door? Thank you.
What kind of charges does the company being invested in have?
None.
It's all borne by your client.
Today.
Smart.
So I saw your team, but I didn't see a
I
technical.
love your shirt, by the way.
I didn't see a technical person on your leadership staff. Are you guys outsourcing your technology right now? Or are you bringing it in-house, or kind of how's that working?
So it's someone that I've worked with over the last about 5 years. He lives in Arizona, and we know him well. And so.
Any other questions? Okay. All right. Well, Eric is going to stick around for a minute so that he can talk to you guys one-on-one if you were feeling shy, right? I think you have a clicker for me. Thank you. I like sharing. Sharing is good. Give him some love, would you? So you've got cards in front of you, and you should know what to do with them, right? During this whole discourse, I imagine you came up with somebody that you feel like you could connect to Eric. And so that's what you're going to do on the back of the card, right? You're going to write down your name and your email address at the bottom, and you're going to write down the name of the person that you want to introduce to Eric and Alto IRA. And it's as simple as that. And then you just give the cards to me or Ashley or anybody who you think works at the Venture Center. And then we take care of those. We collect the cards and then facilitate reminders to make sure that those connections happen. And we do that so that we can track the actual number of connections and report those back to our stakeholders. Because frankly, if you say, I'm going to introduce you to Bob, then you leave here and everybody forgets about making the introduction to Bob. So we make sure that that actually happens. Quick reminder about next week. We have a very special program with Representative French Hill and his staff and a couple of other special guests. They're going to have a whole financial, I don't know, where'd you go? Brian is not in here. Okay, well, I would love to have Wayne. Wayne, can you tell them more about what this is?
I can. So French Hill will be here to talk with us about the Financial Choice Act, which is trying to sort of take the handcuffs off of the regional and local banks, and in order to help them just more effectively deal with the regulatory issues that have really held them down. And it's a big change that's occurring, and he's one of the folks leading that effort, so he'll be here to talk about it. It's really worth listening to.
Great. So that'll be July 7th at 11:30 at the Little Rock Regional Chamber of Commerce. You can find information about that on our website as well as on Facebook, and RSVP that way. And then next week on July 4th, we're not going to be here because it's July 4th, and you should be on a lake or celebrating fireworks or, I don't know, having a picnic or doing whatever it is that you choose to do to celebrate Independence Day. I enjoy some beer and a barbecue grill, if you're asking. Anyway, so that's what we're doing next week. And then after that, we'll be back on July 11th. So stay tuned to our social media feeds and find out who's going to present then. But it's going to be two companies. I'll give you a little teaser, and they're going to be fascinating. So, anyhow, there's coffee and pastries, and I expect you to drink them and eat them and not leave them here, because if you do, bad things happen to the Venture Center team. So that's all we have. Stick around, ask Eric a question if you've got one, and we'll see you in 2 weeks. Okay?